I think it's a year of challenge fundamentally. I think it's a year of opportunity in terms of the stock. So look, this stock has corrected 40% off of its highs. So clearly the markets, the financial markets view is that this is going to be a year of challenge. And the facts are they're going to have at least 3 major OTT launches, over-the-top launches: Disney, Apple, AT&T, Time Warner. We think, however, that Netflix's fundamentals will power through this. Its global presence, its band, the scale of its offering, and exclusivity of its offering. I think all of that allows Netflix to power through. People are going to reach for a couple of these OTT services, but we're pretty certain that one of those in that newly reconstructed bundle is going to be Netflix. So we like the stock here. It's one of our top picks for 2019, precisely because of this setup.
You're not worried about their production spend. You're not worried about their debt.
Those are both things to worry about. The question is, are they going to be able to correctly match the amount of content they need against the sub growth that is required to? And look, they've been able to do it for the last 5 years. Every once in a while they screw up. It's hard to be perfect every quarter, but generally they have a pretty good track record of doing this, and they're doing this as the leading player in what is really an explosive scale category, secular growth category. It wouldn't be an explosive secular growth category, or the obvious sign that it is are these 3 new OTT entrants. We think they can work through that. In terms of the debt, without a specific comment on the debt that the company has, we think the leverage ratios here are very reasonable by traditional media standards, and we look at how the debt trades. I don't think we see anything unusual there.
Let's talk about two hurting stocks. One is Facebook, the other is Snap.
Yeah.
If you had to buy one today, which would it be?
Facebook, there's no question about it. And Facebook is, you talked about the FANG stocks, and I look at those. I think the fundamentals for Amazon, Netflix, and Google have been shockingly consistent over the last year, over the last 2-3 years. They've actually kind of accelerated up, and we've had record high margins at 2 of those companies. And I think those fundamental trends will hold right intact going into next year. Facebook's really the outlier. That's where we're seeing declining satisfaction amongst users and advertisers. But we think that's so more than priced into the stock now. I think it's got the best risk reward, the single best risk reward with a 12-month outlook. We may not see much movement in the stock until the back half of next year, but we think growth rates can stabilize, margins can stabilize, and if you can be patient about it, we think you can make very good returns on a stock buying it right here.